Hello, everyone. Again, my name is Roy Rumbo. Hopefully you've seen some of my previous lectures. I did do an entire lecture on the income statement. As I did in that lecture, I am using the McGraw-Hill, Spiceland, Nelson Thomas textbook called Intermediate Accounting. And for this lecture today, I'm just going to work problems. I'm going to, create some income statements, pretty much like I did when we were looking at the balance sheet. And so it's pretty straightforward. I think it's actually maybe even a little bit easier. But with that, let's get started. Okay, and so here's, and this was problem 4-6 in the textbook. Some of the other ones are going to be my own problems. So here's some data, kind of data from the trial balance, if you will, that from here, we're going to have to go create income statements. So the biggest challenge here, and it is, as I said in my lecture on the income statement, it's about the geography. Where are these items going to end up on the income statement? We're going to do a multi-step income statement. So we're going to have some subtotals there. And so let's just start. Number one, don't forget this, title at the top. So what's the name of the entity? This is, what entity are we doing the reporting for, accounting reporting for? It's the Rembrandt Company. What are we doing here? Income statement. And what is a time period? For the, we could be a month, quarter, whatever. This is for the year. So for the year ended December 31, 2021. All right. Don't miss the first item. What's the biggest, largest item on most income statements? What's the most important item on income statement? Revenue, sales revenue. You don't have revenue, you don't have a business, right? If you're not selling products or services, if that line item is zero, what are you doing? It's all just cost at that point. And so we'll pull up right there, 18, and this is 18 million because it's in thousands. All right. What is the most direct cost related to revenue? That's the products, the cost of the products or services were sold. We have a special account in our general ledger for that, and it's also a name on the financial statements, cost of goods sold. We're going to get into how to calculate cost of goods sold and looking at inventory transactions later. This is easy. All you got to do is put it on the income statement. It's going to get a lot harder. And so we have our first subtotal, which is gross profit. And that's nothing more than 18 million in revenues minus 10.5 million in cost of goods sold. So we have 7.5 million in gross profit. Think about it for a second. You rarely ever see this. What is gross profit was negative? That's mean we're buying stuff and making stuff at a higher cost than what we can sell it for. You can't do that long. You're going to be out of business. So gross profit kind of tells us, if we do percentages out there, do we have, how strong are we in the industry? How can we sell things at a high price? Do we have the brand, the cachet to go out and sell these at much higher prices than what we're paying for it? And really, ultimately, that's what business is all about. So if you have higher gross profit, then you can look at the other items and see what you can do better about. And so next section are just the operating expenses. What the kind of things do we have here? Let's just look at, okay, we have selling and administrative. expenses. What are those kind of things? It could be marketing costs, software costs, accounting department costs. Hopefully earning a lot of accountants and paying them good money. Could be the leaders' salaries in there, and the market VPs and the marketing guys and customer service people. There could be a lot of different things in there. So we're going to do a subtotal for these, 2,500,000 for that. So we're heading down the line. Okay, restructuring costs. We're going to put this in operating income. So this company has some kind of exit activities. And so let's just look down. Okay, interest revenue and interest expense. I'm just looking down things on this problem. Those are not operating costs. Gain, loss, and disposable, no, not operating costs. Now, none of these are part of our operating costs, so we're done here. And that total is going to be 3,300,000. Guess what? Another big subtotal here. Operating income. So this is the income from operating our business. So it's going to include the other operating expenses outside of the cost of goods sold. And I've got 7.5 million of gross profit minus 3.3 million of these operating expenses. And I've got 4.2 million operating income. Now, other income or expense. These are the non-operating, because operating is inside operating income. Let's see what we've got there. We've got the interest revenue. And that's a plus 100. And we got interest expense. Revenue, what is a plus? It's an increase in income, credit balance. I'm hoping you're remembering that. And interest expense, that's a negative to the income statement, right? 300. And let's see what else we have here. Gain or loss on disposal of a business. So this is going to be, that is not part of operating. That's going to be part of, it's a whole business that got sold. So it's going to be part of discontinued operations, both the gain or loss on the disposal of the business and the operational income or loss of the disposed business. So that will go in discontinued operations. So we're pretty much done here for this. So 100 plus minus 300, I've got a minus 200 here. So now we can do income from continuing operations, and that's 4,200 operating income minus 200, 4 million. Now, are we done? This is actually before taxes, right? We haven't done our taxes yet, and so we're going to have to tax affect this. And so what's our income tax expense? It's, what does it tell us? Income tax rate for both current and disposed business operation, 25%. So 25% of 4 million, I can do that math. 1 million income tax expense. So our income continuing ops is going to be 3 million. Let's go do our discontinued op. Income from discontinued ops. Okay, we've got two pieces that combine together. $2 million gain on the disposal of the business minus losses. So both of these go in this line item. And so we end up with a thousand. You get that? So the gain or loss goes into this line item, income or loss from discontinued operations. We were losing money in the business, $1.6 million, but we sold it at a $2 million gain. So we end up with a positive item on the income statement, income taxes. 25% of 400. And so 400 minus 100, income from discontinued operations equals 300. Are we done yet? No. Now we have the big number, the biggest number, net income. So net income includes both income from continuing operations and income from discontinued operations. So we're at 3,300,000. We're not done yet. We've got to go do EPS. And remember from the lecture, EPS is both on income from continuing ops, income from discontinued ops, and net income. Okay, now you notice we only have three. I'm only going to have three numbers for EPS because looks like we do not have any potential shares. There's no convertible bonds or stock options. Don't worry, you'll get there in intermediate 2, 3120 at UNT. So don't worry about that yet. So I'm just going to take income from continuing ops, 3 million, divided by how many shares are outstanding? 500,000 for $6. Income from discontinued ops, 300,000 divided by 500, or 60 cents per share. And net income, I can just add these together, $6.60, which would also equal 3.3 million divided by 500,000 shares. So there's income statement number one. All right, we're 1/3 of the way home on this lecture. All right, let's go do problem number 2. Again, very similar problems. Oh, it's still called the Rembrandt Paint Company. I should have changed the names when I created this. Get a sharper pencil. Now, if you're in my class, I'm marking you down. You don't have a title. 3-line title. Tell people what it is. It's an income statement. I think they would know that, but we still do that. And then what was the period for? Year ended December 31, 2021. All right. First line item. Start up higher this time so I can get there. Okay, sales revenue, 40 million. What did we sell? We sold our cost of goods sold. $32,500,000. Gross profit, $7,500,000. So the big issue here for you is to learn geography where these line items go and the subtotals. But think about the logic. That's going to help you. People care about gross profit. How much are we selling stuff? How much are the things costing us that we're selling. And we can see, hey, we're selling it. All these things we're selling them for 7.5 million more than we're buying them for. That's good. I like that if I was an owner of this business. Now we're going to do operating expenses. Same as last time, we've got selling and administrative. A lot of times you'll see something called SG&A, selling, general, and administrative expenses. It's a really, you would refer to this kind of, a lot of people refer to it as overhead for the business. Okay, 4,500,000. And we've got restructuring again. That's an operating expense. And that restructuring is $1.6 million. We did a really big restructuring. Total operating expenses are 6.1 million. That's the 4.5 plus the $1.6 million. Now we have our next subtotal. Operating income, 7.5 minus 6.1, 1.4 million. Next line item, we're still in our continuing operations, but we have some other income or expense. Again, let's go down. We've taken care of sell. I'm going down my, interest revenue right at the top. $250. We have interest expense. So interest revenue and expense, not really part of what we're doing. Unless you're a bank, then interest revenue and expense is your whole income statement, but we're not in that business here. Minus 150. So 250 minus 150. My other income is $100,000 of income. And now I'm ready to do my income from continuing operations before tax, before income taxes. And I got $1.4 million plus 100 this time, $1,500,000. Income taxes. Let's see what our tax rate is. Again, it's 25%. I'm going to need my calculator. Where's my calculator at? So 25% of $1.5 million, $375. So my final total after taxes from income from continuing operations is $1.5 million minus 375 or $1,125,000. So that's income from continuing operations. That's an important number because we know that is more reflective of what will happen in the future. But we have some other things going on here. We sold the business. So we've got discontinued operations. And we've got, let's see if we have income or loss. So we have a $1 million gain from disposing the business. And then we have $500,000 of operating losses. So we have $500,000 of income. So it's going to be income from the discontinued operations before tax, 500. And then income taxes. You could have a different tax rate, but in this example, it says the income tax rate for both current and the disposed businesses are 25%. So 25% of 500 is 125. So our final income And discontinued operations is 500 minus 125, 375. We still want to know what the total income for the entire business, both continued and disc ops, what is that? And so we call that, the net income. It's a really important term to know. So net income is income from continuing ops plus income from discontinued ops, 375, so $1.5 million. So that number is adding the income from continuing operations and the income from discontinued operations, and I get to $1.5 million. Are we done? Nope. We've got to go do earnings per share. So EPS from continuing ops, EPS from discontinued operations, and EPS in total net income. All right, this is all easy math again. EPS from continuing operations as 1,125,000 divided by how many shares? Let's see, 100,000 shares are outstanding, so that's going to be $11.25. And then 375 divided by 100,000, that's $3.75. Add them together, and we've got $15 earnings per share. Pretty simple, and for my class, you'll have to do an income statement on my exam, the second exam for the course. You'll be very, very similar to these problems. I stay pretty transparent on these. Let's go do one more example. These are so easy that I'm expecting you to do really well on this. The one thing I would say, for those who don't have my class, number one, you gotta do accounting to learn accounting. You can't just sit there and read the textbook. You got to get it out, and when you do it, you internalize it. And I also believe in teaching there's some value in redundancy. So here you go. Seems boring, same example over and over again, but hopefully as you do this 3 times with me, because I'm hoping you pause the video and work it and then watch me do it, you really internalize it. And so when you get to the exam, piece of cake. It's not even a bit of intimidation, no nervous energy. You just do it. And a lot of times what I do say to my class, if you're on the football team, and let's say you are one of those offensive linemen down there blocking, you practice all week. You practice like crazy. You do the same play like 1,000 times. So when you get to the game, you're not nervous. You just do. That's how accounting has to be for you. All right. Problem number 3. And we're still looking at the Rembrandt Company. And we're doing an income statement. And what period is it? For the year ended December 31, 2021. Remember the difference in the balance sheet. We say as of this date, because the balance sheet is a single point in time. What do we own at that single point in time? What are the claims against what we own, liabilities and equity? An income statement, statement of comprehensive income, statement of cash flows, they're a flow. So this is for the whole year ended. What happened during this year? Did we make money during this year? Let's find out. So sales revenue, 75 million. So this company is selling more as we do more examples. And how about the cost? of the products or the service they sold. Special account, special line item, cost of goods sold, 65 million. And our first subtotal here, gross profit, 75 million minus 65 million, 10 million. Operating expenses, same things we've had before. It's too easy. Selling and administrative, $6 million. And then we have restructuring. We had restructuring again. $2.5 million. So total operating expenses, $8,500,000, and we're at another subtotal again. Operating income. How much are we making from just running our business from day to day? $10 million in gross profit minus our operating expenses, 8.5. We are making $1.5 million. Okay, non-operating, which we call other income or expense. Same kind of items we looked at before. Interest revenue and interest expense. Now we could also have gains or losses on the sale of equipment or assets, not a whole business because that's going to go in discontinued, but gains or losses from the sale of operating assets could come here also because they're more temporary. Remember the words from the lecture on this chapter, chapter 4, they could have been, more temporary losses, not to recur in the future. So interest revenue, that's a plus 500. Interest expense is a negative 400. And so we have other income of 100. And that's it for continuing operations. And so now we can calculate income, continuing operations before taxes. That's going to be $1.5 million operating income plus 100, $1.6 million. But we have taxes on that, income tax. Let's see what our tax rate. We're still sitting at that 25% tax rate. So 25% of that $1.6 million goes to the government. What's 1/4 of that? 400. And our total after-tax income from continuing ops $1.6 million minus 400, $1.2 million. All right, time for disc ops. Income from disc ops, or that's what we say, like in the business sometimes, disc ops, but discontinued operations before income tax is going to be, okay, let's look at what we've got here. We, boy, this is just a really, all of these have been pretty much gains on discontinued operations. We got $500,000 gain on selling the business, plus $800,000 of income in the business during the year while we owned it. So $1.3 million. And then income tax expense. Notice we do income tax expense separately. We don't have one big income tax expense. you do it separately for continuing versus discontinuing operations, because there may be different rates. And this simplified example, they're the same rate, but you could have different rates. And so it would really matter. And so 25% of $1.3 million is 325,000 taxes. And so we have total income from discontinued ops after taxes, and I believe that's 975, 1.3 million minus 325. And now for the big guy, net income, and that's a total of income from continuing operations plus income from discontinued operations, 1.2 million versus 975,000, or 2,175,000. Time for EPS. Again, this is easy stuff. As I say to my students, don't relax. Chapter 6, 7, 8, receivables, revenue recognition, inventory coming. From continuing operations, and that's going to be 1.2 million divided by, let's look and see how shares outstanding here from the spreadsheet, 200,000. So 1.2 million divided by 200,000 shares, we're earning $6 per share. How about from discontinued operations? 975 divided by 200,000 shares. That math is not as easy. I've already done it over here. $4.88. And then EPS in total for the business net income is $10.88. So there you go. I've done 3 income statements for you. And again, hopefully you got that. It's probably just boring as heck because it was so kind of brain dead kind of work. But if you're struggling with it, number one, go back and read the textbook and understand these categories and how the income statement is classified between number one, continuing versus discontinued. Also understand how even income from continuing operations is classified into operating and non-operating, because people care about the ongoing operations, you know, revenues minus operating expenses. And even further deep into that, you've got gross profit, which is net sales revenues minus the cost of what we sold, cost of goods sold. So all that, again, tells the story. And so you want to know how to do that story. Then again, if you want to practice this, you can watch this video, pause it when you see the problem. When I got a really blank white sheet of paper up there, you go work it, and then you can play the video again and you can see if you got it right. And I certainly hope you did. And I certainly hope that you're ready for the exam, either in my class or whatever class that you're in. You guys have a great day.